Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a look at the market today and this week. And Ed, even though it was a nice step in the right direction this week, we have not yet gotten a confirmation that this rally has legs.
Yeah, we still don't have that follow through day. There was a lot of good action this week, but still it's a little bit in flux. Definitely want to take a look at a few stocks. Microsoft, which has been a big winner. Meanwhile, I want to take a look at Adobe and NXP Semiconductors as well.
Okay, some lessons there and potential watch list ideas. But first, let's take a look at the major indexes. Here is Thinkorswim from TD Ameritrade, where we're looking at the NASDAQ composite with candlesticks. So on Friday, we saw the NASDAQ gain 0.7%. The S&P 500, the biggest gainer, though, up almost 1% for the day. The Dow was up 0.6%, but small caps not quite participating, Ed. The Russell down about 0.4%. So the notable thing this week was, the NASDAQ getting it back above its 21-day line and more or less staying above it.
Yeah, so look, the major indexes especially had strong weeks. They all got above their 50-day lines, all got above their 21-day lines. A lot of that was due to Apple and Microsoft, and not so much today, but Google for the week. These mega caps. That's all positive. We still don't have a follow-through day, and that would be several days into a rally, a really big gain, a strong gain on higher volume than the prior session. It's sort of like, you could sort of expect a bounce for a couple of days, and we got that. And then it's like, okay, are the big institutions really going to commit to it? Do they want to say, you know what, I want to bet a lot of money. I think this is going to go. Haven't seen that yet. Certainly could happen next week.
Yeah. So in that spirit of the day-by-day candlestick analysis, let's walk through this rally attempt. So this was the 6th. So I guess that's day one. Then we had the big gap up, break of a downtrend above the 21-day line. Day 2, day 3, day 4 what was a down day. And now this is day 5 of the rally attempt. So once again, looking for that follow through day. And not only do we want to see that percentage gain, but what we were saying on IBD Live was getting over these recent highs as well would really help us feel a little bit more confident.
Yeah, and now since we closed pretty well, if say on Monday we followed through, we probably would get above those levels. And the S&P and Dow are looking even stronger. There's a lot of growth names that really underperformed late this week, not necessarily on Friday, but definitely some weakness there. And today, the losers, the market breadth is still a major concern.
Right.
And we'll get to that, I guess, a little later. But weekly, you stand back, it was still a pretty good week.
Yeah. So here's a look at the NASDAQ on the weekly. So a blue bar, it was the period from mid-October to early November. That was a very strong market for growth investors, a time to be making money. The last couple of weeks have been time to start raising cash, taking profits into strength, making sure that losses in your portfolio don't get out of hand. And so this week was a step in the right direction. And now let's go on over to our other chart, which is MarketSmith. So I'm going to pull up that. And we have the S&P Spider ETF, SPY. So similar action here, but right at those highs, Ed.
Yeah, there was actually a record close today. So really strong action for the S&P. No, it's not. It's already above those levels. It doesn't have some of those high flyers that struggled on Thursday, but it does have Apple. It does have Microsoft. It does have Google. Those all had really good weeks. And that really powered ahead. This is well above the 21-day line. This looks a lot better, but it's definitely been that big cap kind of market. And those stocks are performing well, especially the mega caps.
Mm-hmm. Quick look at the Dow here. So right around that 36,000 mark as it got back above its 60-day and 21-day lines, as you mentioned, Ed. And small cap. So the Russell 2000 here, this is a proxy for that weak breadth that you mentioned. And that's not looking great.
No, it's a pretty steep downtrend. Yeah, it came up and look, oh, it's looking promising. And that's the thing, it's sort of like there's this potential when the market was getting up there Tuesday, Wednesday. It's like, hey, this is starting to look interesting, but you want to see that follow through. And if we really saw that follow through, presumably the small caps would be rising, not falling. That was really sort of in like, the market closed at highs, except for the fact that the Russell still fell. I mean, it was that divergence is not a real positive sign. So I would also say, like, if we do have a follow through day, keep that in mind. Do we have a really broad rally? And sometimes that, maybe that'll come on, but don't necessarily think that that rally there's still a chance it could fail, and it may not be as powerful as you might hope.
Mm-hmm. And let's see how growth stocks fared this week. Not really as great as we would have liked, I think. Still up about 1.9% for the week, but so kind of coming back after a lot of damage, but it wasn't a stellar week by any means.
Yeah, so still closing below the 200-day line like the Russell. So they're up, but not up that much. This seems like much more of just sort of a weak bounce so far, as opposed to looking at the big cap indexes. Like, yeah, they look pretty good. I mean, the S&P's at a record close. Definitely a different story on growth and small cap names.
Yeah, and especially those high valued growth stocks suffering quite a bit right now. So here's a look at ARKK, up a bit for the week, but at its lowest levels in quite a long while.
Yeah, it was at a 52-week low, and it had a strong bounce, but then it came down a lot on Thursday. Yeah, Tesla's its biggest holdings, but it has plenty of stocks that are just beaten down really hard. And some of those stocks rebounded to start the week, and you expect that. The market's bouncing. Hey, these stocks that are really volatile, but they also can fall back just as fast or faster. So that's just something for investors to be aware of, that there's some weakness underneath, even as we've had a solid week on the big cap indexes.
Which I think is a great thing that we do on this show, as well as IBD Live, is we're not just looking at the major indexes. So important to provide that technical analysis, but also looking at the different areas of the market that are performing well, whether it's these ETFs, our industry group rankings, sector funds, things like that, just to give that added perspective of the pulse of the market. And, it was a good week this week for those mega cap tech stocks, as we've mentioned repeatedly. So here's a look at Microsoft. A really strong day on Friday, up about 2.8% after coming down to its 50-day line, a rebound off of that level. So continuing to show that relative strength like it has for quite a while this year.
Yeah, I mean, it hasn't risen as much. It's actually been like, well, Apple has run up so much in the past few weeks, but Microsoft has been basically a leader all year long. I mean, sometimes it hasn't been the stock. I mean, but it's been a pretty good winner this year. It was a strong leader last year. This is a long-term leader. There's a reason why. It's been continuing on and doing quite well in this market. Really strong bounce this week. That's a big gain. Even on Thursday, it didn't have much of a loss. As you're pointing out there, it's only like 3%, was that like 3% above the 10-week line, or of that?
It's about 5%.
5%. I'm sorry, couldn't quite read it there. 5%. So, you could have bought it this week, on Tuesday or even today. It's not that extended. You could sort of feel that way as a long-term leader. The question is with market conditions, and it's sort of like if you subtract out Microsoft and Apple, what's left for the rally? And so you'd have to wonder, wait a second, it's not a confirmed rally. How much do I want to commit to it? But this is one that is doing very well and, is otherwise actionable.
Yeah, that's a really good point, Ed, because we haven't gotten the follow through day yet, but it was an interesting week for a lot of stocks that are potentially setting up. So maybe some buying opportunities here and there. But so I think investors are really wrestling with, should I be adding exposure here if we don't have the follow through day yet? But Microsoft seems like a name, if you're going to try to take a nibble, if you've gone, completely to cash or something, that this is one that's not going to be as wild as, some of the other software names that have seen a lot of damage over the past couple of weeks. So
yeah, this is a stock. If it falls, if the market has a really bad day and this falls 3 or even 4%, I mean, that's not fun. That's a totally different story about a stock that reverses and goes down 15% a day. It's really hard to be quick enough to react to that. And so that in this kind of market, yeah, that's a really good point. A stock like this can do better.
Okay, well, let's take a look at NXPI Semiconductors in the Semiconductor Fabulous group, which has been fabulous with a lot of great performers in there, including NVIDIA and AMD, although investors have been tested over the last couple of weeks in those winning stocks. But this is the #1 industry group right now. And so NXPI is vying for a breakout. A couple of head fakes here and there as it's tried to break out, but it seems like there's no doubt that 227.50 area is a pretty significant level of resistance for the stock.
Yeah, and I don't think this is necessarily a bellwether for the market, but you sort of like almost a canary in the coal mine. Look, if this market goes, it feels like this is going to break out. Okay, I mean, there's no guarantees. There's always bad news. It did break out earlier in the week and then came back because of a sell rating. It held up reasonably well, all things and all, but back and forth above that buy point. If the market goes well, this is going to go fine. If the market does not, it's going to be really hard to hold on to it. And it's sort of fluctuated with the market. It had the big gain on Tuesday. It did okay on Friday, pulled back, in between there. So it's right in that area. There's a lot of things to like about it. Auto production is coming back up, which should be good for NXP because that's heavy exposure to that. But it's just one of those situations. You can look at this saying, oh, this is going to go or this is going to tank. It's like, well, what's the market going to do? That it's such a driver of, despite all the reasons why you can focus on this stock, ultimately the market is such a huge factor.
Yes, it is. And now let's take a look at Adobe, ADBE, which has earnings next week. Pretty sharp decline for the stock on the 3rd, but it was able to bounce back. So it's good to see it back above its 50-day line. But this breakout hasn't quite worked out so well for Adobe. But this is yet another long-term leader, Ed, that's hanging right around that 10-week line with earnings next week, though.
Yeah, I don't think that buy point is really valid. I mean, it's sort of nice if it can get back above it, but it broke above it. But yeah, with a 10-week line, you could buy it. It's a little steep, but yeah, you could buy it off of this, or especially if it showed a little bit more strength and got back above the old buy point, perhaps make you feel a little more confident. But the earnings are coming up. And so that's going to be really important. In fact, it's going to be one of the last earnings reports we're going to get. There'll be a few, but, until this will be one of the last big ones. I think it's really important, obviously, not just for Adobe, but for a lot of business software makers, whether it's ServiceNow or, Atlassian or more, high volatile names like Datadog or Snowflake, is there demand for software? I think that's going to be really important for a sector that's taken a lot of hits in the past few weeks.
So we'll be keeping our eyes peeled for those results, and not only just the results, but the stock reaction as well. Okay, Ed, so looking ahead to next week, what should traders be thinking? Because we'll hear from the Fed. What are some of the scenarios that could play out, and how should investors be positioning their portfolios?
Yeah, today's inflation part, I mean, if you had said, oh, inflation's going to be at a 39-year high and the market's going to rally and bond yields are going to fall, it's like, well, really? Okay, that's one way to go, but that's what happened. It does suggest that the Fed will speed up its taper. It doesn't mean they may not decide to, or they may just suggest, hey, we may do it in January or something. But that's something that, the market, we'll see how the market reacts. It could be positive, because, okay, that's out of the way. Or some people think, good, they're taking care of inflation. We don't want it to get out of hand and then things get really bad and they have to really ratchet down. So we'll just have to see how that reacts there. That's on the 14th and 15th. It may be that the market isn't decisive until then. I mean, and it's also, if the market does make a big move one way or the other, how seriously should you take it before the Fed comes in? I don't know. But until we have a follow through day, I mean, ultimately you just pay attention to the market. Until we have a follow through day, I'm not sure how much buying people should be doing. I mean, we got to bounce, and that was sort of, you could have maybe have nibbled on that. But at this point, we're sort of in this little area, especially with the Qs and the NASDAQ. until we really break out of that with that real confirmation, investors may want to hold on to what they have and then wait for that confirmation and instead just prepare for that follow through rather than try to jump ahead of it.
Right. And when it comes to existing holdings, I guess also be prepared for the worst case scenario, which is that this new little rally here falls apart. So as always, we want to be keeping an eye on sell signals. But if we do start seeing more positive signs, you want to have that watch list fresh, right? Be focused on stocks that are ready and setting up.
Yeah, run those screens, freshen those up, and just be ready. Yeah, be ready to make those buys if the market really does show real strength, and be ready to back out of some positions, especially newer ones, if this market turns. So do some prep work and be ready to act, but you don't necessarily need to jump ahead of it anymore, I think.
All right. Well, thank you, Ed, so much for all those insights today and for everyone for tuning in. We will, of course, be back on Monday morning with more on IEBD Live, our daily morning live stream that's interactive as well. We're focusing on potentially actionable trade ideas, overall market conditions, which we know can change very quickly, and also portfolio management strategies, which are quite important as well. So we hope you join us at investors.com/IEBD Live for all the details. We will see you there, everyone, and we'll see you right back here on Monday. We hope you have a great weekend.